let's start this way. One of my favorite Tom Trump isms is the courage to be in the market. And I got the S&P up 16, 17% year to date. I got NASDAQ up over 30% year to date. Does one have the courage to be in this market? Phil Palumbo, founder, CEO, and CIO of Palumbo Wealth Management. So, Phil, after a disastrous 2022, investors are doing a little bit better this year. A good first, 7 months plus. Now what do we do?
The bigger question for me is why didn't we get a recession yet, right? So when you think about coming into 2023, it was recession fears. Now it's recession delayed. And again, why didn't we get a recession? So understanding that it's going to be important. And in my view, I look at it like there were three acts that happened. There was the American Rescue Act, there was the Infrastructure Act, and then there was the Inflation Act. All of that generated money into the economy for building infrastructure, et cetera, which really created this cushion within the economy, because anybody who's been in business for a good amount of time knows that when you have leading indicators doing what they're doing, when you have inverted yield curve, and you have a Fed who has moved rates up as aggressively as he has, you always have a really bad recession. And we just haven't gotten that yet. So what investors have to understand is that you have to be cautious in the short term because of what I just said with the Fed and all those things that normally precede a recession. But with these other parts that I think a lot of prognosticators missed, which is this money that's been flooded into the economy, deficits have gone up. Deficits up, it's tough to really get a recession because the government's spending. So you can't sit on your hands and just watch the market go up. You have to be active. But these are really kind of the push and pull that's going on today.
So if you look at the U.S. stock market, obviously as a forward-looking mechanism, what is it telling us that investors are betting ahead for the economy?
So investors are betting ahead of two things, right? One is AI. So AI, like we talked about this before, is for real. It'll be productive for companies on the front end, which will expand margins, and that'll be great for EPS as we think about 24, 25, and 26. That's number one. Number two, markets are betting that inflation is going to come down. The Fed's going to be done with raising rates, and because of that, interest rates will come down, and that'll be beneficial to stocks. So that's what market participants are betting on.
So, Phil, we're looking at WTI crude oil up another 1% today, $83.79. Is there an energy play out there you like?
I do. So I like Occidental Petroleum. I like the energy sector just in general. I think the economy here, does seem to be reaccelerating here a bit. And, with that, commodities are starting to improve. You can see it in the pricing from a technical standpoint. So Oxy is a company that throws off really strong free cash flow. And as the price of crude continues to rise, free cash flow becomes that much better for Oxy and many other energy companies as well. So that's a play that I like a lot.
What about Nike?
Yeah, so Nike, as we all know, is a wonderful brand. It's trading below its intrinsic value by about 20, 25%. Recently, it's come down in value from a pricing standpoint. I mean, the return on investment capital on average has been 50% the past 3 years. That's continued to be projected to be at that level or even greater than that. Their EPS has doubled over the past 10 years. The story about Nike is not going away. I love their direct-to-consumer strategy, eliminating the middleman. I think that's really going to work well and be profitable to the company. So we started buying into that about 2 or 3 days ago. We bought about a 70.75% position within clients' portfolios. We will add if there's a continued weakness in that particular area, which may happen as a result of China weakness.
And the latest results that we had from Nike toward the end of June, obviously seeing that sales strength, but this is a very discretionary company. If these are what consumers are going in and buying, especially these niche types of brands, does that really tell us that there's a recession on the horizon?
Yeah, I mean, that's the thing. So it's kind of, if you listen to Target and you listen to Tyson Foods and what they're saying, there is concern that the consumer is abating a bit. But if you listen to what Amazon is talking about, which is one of the strongest areas where you're seeing consumers buy, their numbers are very strong. So it goes back to what I said before, the jobs numbers are very strong. If you have jobs numbers that continue to be strong, consumers are getting a paycheck. If consumers are getting a paycheck, they can go out there and spend money. And that's what we're going to continue to see going forward. A lot of Nike is around China. China's strength coming out of COVID hasn't been as great as many people anticipated. And a lot of Nike's EPS growth we're estimating will come out of China. So we really need to see a strong China for Nike to really work as we think about Nike over the next 3 to 5 years.
We're going to get some inflation data over the next couple of days. Where are you on your inflation watch here for this economy?
It goes back to what you were asking before about the market overall. So the market overall is anticipating inflation to continue to decelerate and the Fed to pause and be done. I don't know if it's going to be that easy. I do believe inflation has come down quite precipitously from its peak, but I do think we may get sticky because of housing and wage pressures as we think about the CPI prints going forward as it relates to core. And if you take non-core, regular CPI, which includes food and energy, now with energy prices increasing, you may actually see that number disappoint. So, it's interesting. If you look at the 10-year Treasury, it's holding that 4% number. Right now there's a huge short on the 30-year, based on various commentary that we've all probably know about and been reading about. So you see it. Everybody's waiting for this print tomorrow. I think it's going to be a print that's not going to be good and concern a lot of market participants that maybe the Fed is not done.
We only have about 45 seconds left. You were talking about Occidental Petroleum earlier. I'm curious, when you're seeing this big rebound, especially today in energy stocks, up about 1.5% in the S&P 500, do you think we've gotten to a range where it's a contrarian indicator, especially with the amount of massive outflows we've seen in energy, to where investors are going to come back in and start buying those shares?
Yeah, remember, energy is one of the worst performing sectors year to date amongst healthcare and staples, right? So if we're starting to see an area where there's value relative to technology, consumer discretionary, which are sectors that have performed really well year to date, if you're going to rebalance a portfolio, if there's concerns about inflation, then maybe energy is a place where you want to be. And again, we'll see tomorrow with the print and how that trend's going forward. But I think that's what we're seeing with market participants.